Welcome to this week's episode of Your Stock Request for the 2nd of November. Every week I will look at the charts for a few different stocks as requested by you. So if you have a request, email us at mail@fairmontequities.com. Limit of one stock per person, and there's no guarantee that your stock will be covered depending on the demand. Also, just take note of our disclaimer, any advice is general only. The first stock we have today is TPG, which has the code TPM. This is a weekly chart. It peaked in around July last year. Obviously, it's had a bit of a tumble. Seems to be slowing down. But if I just move to a daily chart, we can see that for the month of October, it has had a fairly decent run, which is good. It's a good sign. It's encouraging. But the problem is there's obviously a lot of resistance around this sort of zone here. There's been a lot of price action previously, and it looks like we're getting very close to that zone now. So chances are it could come back, but if it breaks through here, then it'll be a lot of hard work until it can go higher again. So looks okay to hold for the moment, but a fairly tricky proposition if you're looking to now buy it. I think there's still a little bit of risk. Okay, the next stock we have is Metals X, MLX. This is a very good looking chart. So I'll just go back the last 10 years, 10, 12 years. So we could see there's been a lot of resistance around this 90-cent region, and then it's broken out recently. So if we just zoom in here, we can see the last couple of weeks have been pretty positive for MLX. And we can see that leading up to the breakout, we've had these series of higher lows, and overall this has been forming an ascending triangle. So just looking at the daily chart, we could see the break, a bit of a consolidation, and it looks like the stock's on the move again. And obviously volumes picked up during the break. So this is a stock where if you're looking to buy it, now's the time, pretty much. It's broken out of a very long-term resistance level, or if you're already holding it, it could be a good chance to top it up. Okay, the next request is on Suncorp. Now we've covered this one before in some of our research a few weeks ago, but as a bit of a recap, we're quite negative on the stock. So just going through the reasons. So this is the previous peak back in 2014. Share price fell away, and then it struggled to head back to that peak. And this is where we got negative on the stock because it just managed to go to a new high, but then got sold down and seemed to be struggling. Then, of course, their results in August were pretty poor, and the stock got belted. So if I just grab my Fibonacci tool and just measure the rally up, get rid of that line, we could see it's fallen to about a 50% retracement. Or if I'm just looking at the body of the candles, we could see it's come to the 61.8. So it's generally respected these support levels fairly well. Bounced up, bit surprised at how much it's bounced, to be honest, but what it's now doing, if we just measure the move down, and I'll zoom in. So this is the recent move down. What we can see is that it's hit the 50% level and then stopped short. It's not looking too negative in the short term. So if we look at a daily chart, we could see this resembles a bit of a flag. So we might try to make a move towards this resistance line here, just a little bit over $14. So still just keeping with the daily chart, we could see it might head up into the gap here. But I'd just be using that as a selling opportunity. I mean, it would be very unusual for a stock to get belted so quickly and then just rebound just as quickly. You can also see there's not really much volume going into the stock either. So if you're still holding Suncorp, I'd be looking at a selling opportunity up here, and it should come back and should come back here, use up a bit more time. Okay, the next stock is Woodside. So I really like the way this one's trading. We have a weekly chart here. So this is one where previously we said, look, any move back to 30 or under is a buy. At worst, it gets to 28. So it's essentially done all that, and now it's launching higher. So moving to a daily chart, we could see the nice sort of rounding off here. Just put in a horizontal line. So we could see generally it's been, okay, so we could see it's sort of rounded off and sort of broken free of that range now. So that's looking quite bullish. In terms of a target, well, it looks like Woodside's in a third wave. So we could see it found a low in September, made quite an impulsive move off that low, came back for wave 2, and now we're in wave 3. So let's try to measure a target. So what we do is we measure wave 1, assume that wave 3 will at least be 1.6 times, which brings us to 3150. But the way things are going, in terms of the market looking positive, oil looking positive, and Woodside breaking out of that range, this range here that's been in place for a few months, I'd say it'll kick on and do more like a 2.6 times. So that will bring us up to about 3350, which will be just under the highs here, which will be great. So what we'd expect is a wave 3 up to here, and then a bit of a congestion, possible pullback while it gets ready to push through to new highs. And the final stock for today is Harvey Norman. Not looking very good. So the peak here in August, we've had an impulsive move down, fairly corrective move up, a big sell-off, and then we've been struggling ever since. Obviously the stock had a bit of a decent move up yesterday on volume. But what we need to bear in mind is whether the stock overlaps this low. So at the moment, it looks like we've got a wave 1, 2, 3, a big wave 4, and if it fails to go through about $4.20, it's just going to fall down towards about $3.50 at least. So can't get too excited about Harvey Norman either. Well, that's it for today. Remember to send in your requests, mail@fairmontequities.com. I'll have a look at your stock next week for you. And also do the right thing by your friends and share this page on Twitter and Facebook.